Not all home loans are created equal. Some mortgage types may be a better fit for you than others. For so many veterans and service members, the VA loan program is the most powerful mortgage product on the market. VA loans come with no down payment, no mortgage insurance, more flexible requirements, and other big-time benefits. But a home loan isn't a one-size-fits-all product. Everyone's home buying journey is different. So when you're talking with lenders, the focus should really be on finding the right loan for you, the one that makes the most sense given your credit, your finances, and your home buying goals. I do think it helps sometimes to take a look at the 4 major loan options using some real-world numbers. And so let's do that. Let's say in this example that you're looking at a $200,000 home purchase at an interest rate of 4.75%. And to help estimate a realistic monthly payment, we'll say that you're paying $260 a month for your property taxes and your homeowner's insurance. You'll pay a portion of those two every month as part of your overall mortgage payment. Let's start by talking about credit scores and credit score minimums. Requirements for credit scores are going to vary depending on the type of financing you're looking at, the lender, and other factors. Now, FHA loans, these technically allow for credit scores in the 500s, but you're more likely to see lenders looking for a 640 or a 620 FICO score for any of the government-backed loans. That would be FHA, USDA, and VA. And you might actually find out there that VA lenders wind up often having a lower benchmark than you'll even need for USDA and FHA. But again, every lender is different. Now, credit score benchmarks for conventional loans are typically higher. They're often around a 660 minimum FICO score that you'll need. But if you want a shot at the best rates and terms on conventional loans, you might need something significantly higher, more like a 740 FICO instead of that 660. Conventional loans also tend to be less flexible and forgiving when it comes to things like previous bankruptcies, foreclosures, and other derogatory credit. So next, let's talk about down payment and minimum down payment requirements, because those also vary by loan type. FHA loans, these typically require a 3.5% down payment. So on this example, $200,000 loan, that's $7,000 you would need on hand for your down payment with that FHA lender. Now, both USDA loans and VA loans offer qualified buyers an incredible benefit. No down payment, no need to bring that cash to the table. It can take people years to save enough for an FHA down payment, let alone the 5% that most conventional lenders are looking for. A 5% down payment on a conventional loan, that $200,000 example, that comes out to 10 grand that you would need in cash at closing. Now, unlike the government-backed options, one thing that conventional loans don't have is any kind of upfront funding fee or mortgage insurance premium. Okay, these are fees that are usually tacked onto your loan balance. You end up borrowing more money. Now, the fee for FHA buyers right now is 1.75% of the loan amount, and for USDA borrowers, it's 2.75%. So these figures represent that $200,000 loan reflected with those upfront mortgage insurance costs that get tacked onto your loan balance. Now, VA buyers also have an upfront funding fee. It's called the VA funding fee. And when you're using this benefit for the first time to purchase a home, you're typically paying 2.15% of the loan amount. In this example, that comes out to $4,300. Now, the good news is that about a third of VA buyers don't have to pay this fee. They're exempt from paying the VA funding fee because they receive compensation for a service-connected disability. Now, along with no down payment, another big benefit of VA loans is that there's no mortgage insurance. That, as you'll see, is a really big benefit. So FHA and USDA loans have annual mortgage insurance premiums that can add $80 to $100 or more to your payment every month. Conventional borrowers typically need to pay for private mortgage insurance, or PMI as it's known, unless they can put down 20% of the purchase price. 20% of our example $200,000 loan, that's a $40,000 down payment. Now, fees for PMI can vary depending on your credit, your loan-to-value ratio, and other factors. It's typically anywhere from 0.2% to 1.5% of the loan balance. In this example, to calculate it, we used a real-world, realistic example of 0.72% for your PMI. For FHA, right now, the annual fee is 0.85% of the loan balance. For USDA borrowers, it's 0.5%. So that's what these numbers look like. This is added on to your mortgage payment month in, month out. And so knowing that, now that we've filled in our grid, let's tally all of these numbers up using a calculator, of course. Keeping in mind also that $260 a month estimate for your property taxes and your homeowner's insurance portions, and see how everything stacks up. So FHA loans in this example end up having the highest monthly payment at $1,424. Next is the USDA buyer at $1,418, and then the conventional at $1,365, and VA winds up at $1,326. So VA buyers in this example have the lowest monthly mortgage payment given these parameters. But there are advantages and disadvantages to each of these loans. So the question becomes, what's the best loan for you? And like so many things in life, the answer is, it depends. A good loan officer can help you weigh the pros and cons of all of your options. Generally, FHA loans, these might be a better fit for buyers with low credit and little cash to put down. USDA loans could be a really good fit for buyers looking in more rural areas. VA loans, these can be a tremendous fit for qualified buyers who don't have excellent credit or enough money to put down 20%. And conventional loans can offer a lot to buyers who have excellent credit scores and solid down payments. For veterans and service members, just knowing VA loans are out there is critical. Being able to compare rates, costs, and terms across the different loan types, it helps buyers get the most from their dollar. Look, a VA loan won't be the right fit for every military buyer. Veterans who have great credit and enough cash to put down 20% would want to take a long, hard look at conventional loans. But that kind of financial picture isn't the norm for many veterans and military families, and that's a big reason why the historic VA loan program is more important today than maybe it's ever been.